Okay.
Okay.
New York City Disrupt and Startup Battlefield. This is going to be the best one yet. Trust me, great speakers, amazing Battlefield companies, great Startup Alley exhibitors. It's going to be tremendous. But before we get started, I just want to thank 3 of our sponsors, Sequoia, which hosted the rehearsals for the Battlefield companies, and Perkins Coie and UPS Connect, who are handling the office hours for the Startup Alley companies. So before we get the show on the road, I want to introduce the editors of TechCrunch, Matthew Panzarino and Alexia Sotsas. Let's give them a big hand.
Good morning, Disrupt New York. After a great hackathon yesterday and some wonderful weather this weekend, we're extremely excited about what's in store today.
Thank you so much for changing the weather from rain to sunshine. We really appreciate it. This is our 15th Disrupt, and over 1,000 people have filled up the historic Manhattan Center to see a lineup that includes Oculus CEO Brendan Uribe, Marissa Mayer, Fred Wilson, and Sophia Amoroso.
Today's a must-watch with Vice's Shane Smith, fresh new YC head Sam Altman, and of course my interview with the guy who's trying to make VR happen for all of us.
And enjoy the show.
Thank you.
Ladies and gentlemen, please welcome TechCrunch writer Jordan Crook.
Are you guys ready? Is my mic on? I don't have my, there we go. Okay, are you guys ready for Disrupt? It's about to begin. It's really exciting. Like the voice of God said, I'm Jordan Crook. I've been writing here in New York for TechCrunch for about 3 years now, and I've really loved watching the ecosystem kind of blossom and grow. The cool thing about Disrupt is that unlike other tech conferences, we don't just get some of the people who are relevant or smart or have deep pockets, we get all of them. So like they said, the lineup is amazing, and we have pretty much all of the best and brightest minds in New York in one building. I mean, heaven forbid something were to happen and Foursquare would lose its entire user base. One fell swoop. Foursquare, speaking of, is just one of many investments that our next speaker has to be proud of. Others include Twitter, SoundCloud, Kickstarter, and those are just some of the exits. He's been investing for 17 years here in New York. You really can't say New York VC without thinking of this man. So we're going to bring Michael Arrington on stage, and he is going to be interviewing Union Square Ventures' Fred Wilson.
Good morning.
Morning.
We were just talking about Backstage how the first session of the conference is always sparsely populated, particularly in New York, because people don't want to get up at this hour of the morning. So the nice thing is they always put the most powerful, interesting speaker on first.
Is that what they do?
Wake people up. Yeah, yeah.
So that's why you're on first?
No, that's why you're here, because you always say fun stuff. And people in the hallways and stuff will start to be drawn in. The benefit of this is whoever goes next, and I'm not sure who it is, but they get this warmed up like awesome crowds.
All right, so we're the warm-up act.
We are the warm-up act, yeah. So I asked you to prep for this with me, and you declined, saying that you prefer to keep things sort of fresh.
Yeah.
But you gave me links to a bunch of interviews you've done over the last 6 months.
Right.
So yesterday, as I told you, was Fred Wilson Day for me, watching video interviews, written interviews, the web and Business Insider, some recent stuff you've read. And so I really feel like we've talked a lot, even though we haven't. And I don't want to ask you much of all that. I want to ask you totally new stuff.
Okay, great.
To make it a little more interesting. So first of all, at the web, they brought you in, this is in December, to talk about the 10 years of the future, and you talked about whatever you wanted to talk about, which is sort of stuff you were seeing right now. So I'd like to ask you a different question about 10 years in the future. We look at the market caps of the biggest internet companies today, or at least the biggest consumer-facing ones. In order, it's Apple, Google, Microsoft, Facebook, Amazon, eBay, Twitter, and LinkedIn.
Right.
Maybe I left one or two out. Apple at $510 billion, LinkedIn at 18.
Right.
2020, in whatever number of years from now, tell me the top 3 or 4 internet companies
Google,
in terms of market cap.
Google, Facebook, and one that we've never heard of.
Okay, why is Apple gone?
Because I think they're just too rooted to the hardware, and I think that hardware is increasingly becoming more commodity, and they don't have anything in the cloud to speak of, and the stuff they have in the cloud I think is largely not good, and I just don't think that they think about data and the cloud in the way that you need to think about things.
What about Twitter?
Twitter maybe will be 4, 5, 6, 7, but I'm not sure that there'll be 1 or 2. And I had to say one we've never heard of before, just because I believe that.
Now, you know what that company is that we've never heard of before, right?
I sure hope so.
Could I ask, are you an investor in that company?
I sure hope so. I can't tell you for sure, but I really hope so.
But you know, right?
Maybe.
You said recently that you think Google Glass is a big loser. You'd never wear it. You can't understand why anyone would wear it.
Did I say that?
No. You said Google Glass is the Apple Newton of wearables.
Right. So I think that they're directionally correct.
Yeah.
But I don't think that the implementation is right.
So you think this product will fail, just as the Newton did? You sort of said that already, right?
Well, if you think of the Newton as the predecessor to the iPod and the iPhone, then that product evolved and got better. But that's not really what happened.
So I'd love to do a poll with the audience.
Yep, let's do that.
The question I think you asked was to raise your hand if you can see yourself wearing Google Glass every day on the street.
Okay.
All right. Go ahead and raise your hand. So almost no, there may be 2 or 3 people. Now in Europe, you got like a 15 to 20% of the hands raised, right?
Right.
Does that mean we care more about privacy than Europe does?
No, I don't know. Maybe none of them had tried it yet.
Yeah. Well, raise your hand if you've had Google Glass on at some point.
Yeah, I see a lot of people.
And yet none of you would be willing to wear it every day. Huh. And yet you still have Google as the most valuable company in 5 years.
It's not about Google Glass.
Right.
I just think it's about everything that they're doing. I mean, I just think their strategy of getting all of us to use more and more of their products for free and put more and more of our data in their cloud and then do more and more machine learning on that and then provide more and more service to us based on that. This is an incredible strategy.
And you don't see that as evil?
Well, it could be evil.
Yeah.
They have done nothing to date that I can think of that is truly evil.
Okay.
But I think there is the potential. I mean, they have more potential to do bad stuff than anybody other than maybe the NSA.
Right.
And so I think the onus is on them not to do it, because the minute they do it, I think they're going to really screw up their brand and then their company.
Okay. You also recently have said that you don't mind being spied on by governments and by the big internet companies. No, you did. You said it.
Doesn't sound like me.
No, you said, however, sometimes I don't want to be spied on. You said, in general, I don't mind being spied on by government and the internet companies, but sometimes I don't want to be. Why are you pro-spying, and why are you pro?
What I would like to be able to do is have an on-off switch where basically I control when and who is spying on me. Because I think that...
But should the terrorists have an on-off switch? I mean,
should the terrorists have an on-off switch?
Yeah, they shouldn't, right? If you have an off switch and you go to off, doesn't that immediately make you a terrorist?
I don't. Your question about whether terrorists should have an on-off switch is a great question. I guess what you're saying is, if you give Fred Wilson an on-off switch, then you got to give everybody an on-off switch, and then if everybody has an on-off switch, you can't spy on anybody.
Or anytime anyone goes to off, that means they're engaging in terroristic behavior, theoretically.
Or just having an affair.
So it's love or war, basically.
Exactly.
But have I now changed your mind in that spying is always bad, or no? I think I have.
Here's what I think. I think we ought to know what people are doing with our data, and we ought to have some ability to control that. And I guess the true question is, what's the end game there? Like, where does that all go to? I think that people should be able to opt out of services that essentially mine their personal data and do things with it. I think the majority of us would probably not do that. Majority of us would probably say, okay, that's fine that Google's spying on me. I trust them. That'd be my guess.
Okay. Raise your hand if you are fine with Google spying on you because you trust them. Okay.
And how many don't? Let's just see the other way.
Who thinks that the people who just raised their hand are going to help destroy this country and our way of life?
So what I would observe is that about half the people didn't raise their hand, and of the half that did, about 2/3 said they were okay, and about 1/3 said they weren't, which means that I'm right.
Okay. So totalitarianism is a better outcome for you than anarchy. I think that's what you're saying. And we can move on now if you like. I had a question here. Can a republic function long without liberty? But I already know the answer to that. So we're going to move on. You don't want to talk about the most important issue of our lifetimes.
I do want to talk about it. I'd happy to spend the entire conversation talking about that. It was one of the 3 things I said at Le Web that was important.
You said a lot at Le Web. How did you get up and give a 30-minute speech with no notes? I mean, you had that down, right?
What I do is I write a little outline, and I just go.
Let's talk about one issue that's very relevant today, and you've written about it. It's Square and Box postponing their IPOs, but in general, that maybe we've gotten a little fluffy in the valuations of some of these late-stage companies, and you think that some of them might be in real trouble.
No, I don't think they're in real trouble. I think, and I said this in my post yesterday, I don't think Square and Box are in real trouble. I think they're going to have to navigate their way out of that. They may have to do another financing, and that financing, like Facebook's DST financing, might be at a lower price than the last round, or they might have to cut back their spending and make their money last longer. I mean, those 2 companies I think are going to be fine, but I think in general, the public market valuations got too high, and then that went down into the private market, and the private market valuations got too high, and now the public market valuations are correcting, and now there's a bunch of companies that raise money at really high valuations in the private markets, and they're going to have to deal with that. That's just the reality of where we are.
With the benefit of hindsight, if you could go back and run Square and not do their last big valuation, which was it 5 or something? It was some number of billions of dollars. Would you have said, no, we're not going to do this? We're going to raise less money or a lower valuation? Or would you have gone ahead and taken it and fixed the problem if it came up later?
I'm not close enough to know how important it was for them to have $200 or $300 or $400 million. I don't know how much money they raised at that price, but it may be that they pushed the valuation because they wanted to raise a whole bunch of money and they didn't want to dilute that much. So maybe it was the right decision for them, but it may be the better decision would have been for them to raise money at a lower valuation and raise less money and not be quite as aggressive at doing 10 different things. Because they've gone in a bunch of directions. They've launched 4 or 5 new initiatives in the past year. Sometimes I think it's better for companies to be focused and stick to 1 or 2 things and be more efficient with your time and money.
So let's talk practical advice for startups, though. You have a startup that's doing quite well. It's a good market. They have a chance to raise a lot of money. What should they consider beyond just taking as much money at a highest valuation as possible, like for the health of the company?
I think what I always advise companies to do is let's look out 18 to 24 months and let's take a worst case scenario in terms of what our financial performance is, and let's take a worst case scenario in terms of what the market might look like in 18 to 24 months, and let's make sure that we raise at a price that we can raise the next round at a higher price.
Have you ever done that?
Yeah, many times.
And you've had companies raise less money at a lower price than they otherwise could have?
We've had companies take money from us at a less price than they could take from other people, all the time.
And is that like a high five around the office, or do you actually think they made the right decision?
I think they made the right decision. There's a chart that I put on my Tumblr last week fredwilson.vc, of the top 20 venture firms, and the average amount that those firms invest in Series A and the average valuation, and the average amount that those firms invest in Series B and the average valuation, we're at the bottom of the list. Yeah. We are the lowest on that list.
Meaning you're the cheapest?
No.
No.
Because it's the lowest money and valuation.
Okay.
So we're the least dilutive to entrepreneurs.
So you're cheap and you write small checks.
And the entrepreneurs take less dilution when they take money from us.
Now, does that just mean that you have the brand to get away with that?
No, it means that we convince the entrepreneurs that money is never a recipe for success.
Now, I found that rich people often say that, but sometimes money's needed to run a business, right?
Of course, we're investing money. It's just that too much money is the root of all evil.
Right, but too little money is also not great.
Right, so what's the right amount?
Yeah, okay. Okay, I want to talk about some of these things. You gave this speech at LoWeb that was great, and you talked about, I wrote it all down, you wrote all kinds of things that you talked about bureaucracies being taken down, you talked about unbundling of the networks, you talked about we're all a node in the network and some other things. It seems to me, though, that as I've become a VC, I've found that VCs who are successful often look at the history, the recent history, and then derive a narrative around it to talk about why they think things are happening, as if it's predicting the short-term future.
Right.
As opposed to, we were smart, we just randomly got into some good companies and we made a lot of money. Is there some of that with you, where you're building a narrative around, because it looks like you're stretching in some places?
So we constantly try to build a narrative to explain what we've invested in, what we are investing in, and what we want to invest in, and we want to tie that together. And that's valuable for us for two things. It's valuable for us internally as a filter, and it's also valuable for us externally to market ourselves to the world of entrepreneurs and say, hey, if you buy into this narrative, come talk to us.
But also, if you're just interesting in general, come talk to you as well, right?
Well, if you're building a hardware product, for example, you shouldn't come talk to us. We would not have invested in Oculus, even though it was hugely successful, and it might be one of the most interesting products to come around in the past 5 or 10 years. That's not what we do.
Right, but you invested in Kickstarter.
Kickstarter, absolutely.
Yeah.
Kickstarter is exactly what we do.
But isn't that sort of investing in hardware? I understand that's not all they do, but it shows that you think the space is interesting, right?
No, Kickstarter isn't about hardware at all. Kickstarter is about a service that lets people who want to make something get access to the capital to make it.
Right, and often it's hardware.
Well, I think maybe 20% of Kickstarter projects are hardware-based, maybe less.
All right. Okay, here's something I really want you to expand on, and then we might have time for a couple of questions. But you talked about Bitcoin. You've spoken about Bitcoin, and you've invested in Coinbase and any other Bitcoin?
Not yet.
Not yet? Any unannounced ones yet?
Not yet. But we're looking, I think, not just Bitcoin, but blockchain. Blockchain, I think, could be much more, a much bigger opportunity than just Bitcoin.
Right, so let's expand on that. So you've talked about the Bitcoin protocol as being a blueprint for things like an identity platform on the internet. Can you unpack that and explain it to me?
Yeah, so the whole thing about blockchain-based architectures is that they allow trustless transactional activity. Right, and so identity, right now, you need somebody to be the arbiter of your identity, either Facebook or Google Plus or Twitter, somebody who developers can then use for login and other information sharing, and they basically provide identity services on the internet. I think you could do the same thing with a blockchain-based architecture where there is no third party, there is no clearinghouse of identity information. You just use a blockchain architecture to verify that I am me and you are you.
Okay, and have you seen any startups?
Well, there's a company called OneName.io that has built this on top of the Namecoin blockchain. There's a few other startups that are working in this area. I think something will emerge. I really do. I'm really excited about it.
All right, and it's your intention to invest?
I would like to invest, but we want to see, we're not going to invest until we see some real uptake. We're not seed investors, although we have made seed investments, but we are better at making investments once we see that something really is working.
Yeah. Okay, so if you have a question, we're going to have time for 2. Go ahead and stand up now, and we'll get you a microphone. While we're waiting for that, nobody stood up. That is Interesting, because I can keep talking. What's the hottest startup in New York right now? Are there any?
Well, there's a lot more enterprise oriented stuff in New York right now, which is a real sea change, and I'm not entirely sure why it's happened. MongoDB is not a startup anymore. MongoDB is 5 or 6 years old now.
Right.
But MongoDB, I think, showed a lot of people that you can build real enterprise SaaS type companies in New York, and we're seeing probably more of that than anything in New York right now. So I probably would have to pick a company like that.
Is there an IPO candidate?
Well, I think we have a couple companies in our portfolio that I think in New York that I think will likely go public if there's an IPO market in the next year or two. Companies like MongoDB and Etsy, I think, are both well positioned to go public, but you know, we'll have to see whether anybody wants to buy public offerings.
Is Kickstarter a public company someday?
You know, the Kickstarter management team has said that they have no intention to take the company public or sell it. They want to build a large, independent, privately held company, that kind like, you know, what Bloomberg had built here. And so I think current course and speed, no, they're not going to do that.
Your investments are about half and half in New York, maybe 40% New York, is that right?
A third in Silicon Valley, 20% other parts of the world, and the balance in New York.
If you had to give up either the rest of the world or New York and never invest in that segment again, which would it be, if I forced you to?
Could I pick Silicon Valley?
You could either take Silicon Valley and everything but New York, or just New York.
I guess I'd have to take everywhere else because there's so much interesting happening everywhere in the world.
So you're really down on the New York tech scene, is what you're saying.
That's like the, you know, why do you beat your wife question, you know? It's like there's no good answer to that.
Well, but the only startup you mentioned that was hot was MongoDB, which you said is 6 years old and it's ready for an IPO. So there's nothing on the...
Well, we have a co-investment here in New York in Codecademy, which is doing great. I'm just, you know, if you want me to sit here and pimp our portfolio, I'll do that all day long. I mean, we got a bunch of good companies here in New York.
Wait, you haven't been doing that?
No, you've been doing that.
Okay, well, we have no questions at all, so...
All right. We have 1 minute. What?
We got one question here.
Okay.
What do you look for in founders and management teams?
So that's two different questions. In a founder, you want passion, you want charisma, you want salesmanship, and you want sort of the authenticity of why you're doing it. And that's all. It all gets down to the ability to convince people to join you, whether it's to hire people, to raise money, to get media writing about you. So that's what you want in a founder. In a management team, you want people who can do the thing that you need to do. Can they build a product? Can they market a product? Can they sell? You know, so I'd say founder is all about like just kind of raw energy and charisma, and management team's about execution and capability.
All right, well, thanks very much.
Great.